actually sprang a surprise by saying that it is applicable to all companies except OPCs and small companies. Now, all companies therefore having share capital more than 50 lakhs or turnover more than 2 crores are not small companies, and therefore rotation applies to them automatically. Listed companies anyway it would apply as such. The initial thought was that it would not even apply to all listed companies but only the top 100 listed companies, and then slowly they will roll it out for the remaining listed companies. But as the draft rules currently stand, this is what the rotation is applicable to. I believe in most of audit firms 90 to 95% audits will get rotated if this rule gets approved. But obviously the institute is representing very strongly on this, and this is the right place where it can represent that this can affect lot of members, and it can obviously affect the audit quality when new members also come. But we'll have to wait and see what finally comes. As it now stands, you may have to start looking for new clients from next year on itself, or all of us have to start looking for new clients next year itself, or exchange each other's clients. Now it throws out some surprising things. If you are an auditor of a company since last 20 years, you have a transition of 3 years. If you are an auditor of a company only since last 9 years, your transition is only 1 year. Because there you don't fall in the transition provision at all. And that is what we have thought is the right reading, that once I complete 10 years, transition doesn't apply. Transition applies to me if I have already completed 10 years. So if I am in the 9th year, you are actually worse off than if you are already since 20 years. But if you are in the earlier years auditors under 2 different names, which obviously maybe there is a merger of the firm or something which has happened, you obviously get a further 5 years which is there. Now, if you look at the real words which are there, this transition of 2 years effectively will be only 2 years. It will not actually give you 3 years, right? The reason is my appointments normally take place in September. So if in September 14 I am already in the transition provision, I have to relinquish the audit before March 17. So my appointment will be from only 14 to 15 and 15 to 16. I cannot go beyond March 17. So I cannot go to September 17 at all. So effectively the transition is only 2 years. Though it is said 3 years. If you look at the actual dates of appointment, how these appointments work in the AGM, it will be effectively only 2 years. But this is how the provisions are there, and in lot of bigger companies the audit committees may actually do the rotation in the first year itself. They will say, why should we wait for 3 years? Because ultimately audit committees also want to do something. And this is one very easy thing which they can do. Let us change the auditors, so they can say that yes, we have implemented the Companies Act and so on. So can you be appointed for less than 5 years? Seems difficult, because now the appointment is in blocks of 5 years. So the appointment would be in 5 years. Of course, one debate which is there is, if I have completed only 9 years, my appointment will be now for 5 years at a block. So can I go to 14 years? But that may not work, because in 9 years time, I know that I will comply or finish 10 years. So even if you are appointed for 5 years at a time, you may have to resign after 1 more year or something. No clarity if you resign before completing the term of 5 years. The new auditor, whether will he get another 5 years or will it be only for the balance period? Again, this will be evolving slowly. Your RBI and CAG rotations 3, 4, 5 years obviously seem to be independent of this. They may again realign to this. And whether Indian foreign subsidiaries also need to rotate. Each company will have to look at it individually. Whether you are a subsidiary or a parent company, each company will have to look at it independently and decide whether rotation applies, whether applicable to branch auditors, obviously yes, and whether audits of SFS and CFS are separate, the answer is no. Both go together. Whoever is doing separate financial statements or standalone financial statements, he will also do the consolidated financial statements. Some people said that there are not enough auditors in India, especially with the results which came in before 2 months, that this rotation will not have enough auditors. But this statistics which was given out by Institute and MCA says that there are 2.8 times number of auditors as compared to the companies which need an audit as such. So there are enough auditors, and this is a statistic which was just there before 1 year. So obviously few more members have been added. As of now, I think there are 2.5 lakh chartered accountants who are there, of which all may not be in practice, but the number of people in practice may have already gone to 110,000 or something. Eligibility. Who is eligible? Individuals who are a CA firm with majority partners practicing in India, which obviously means you may have some partners now practicing outside India, or it could even mean something like a multidisciplinary firm. So this is what obviously is being encouraged. LLPs also are eligible, as is the case today. Disqualifications, these are the same which are there currently, but what is there in disqualification is holding of security, and the person who or his relative or partner holds any security or interest in the company, subsidiary, holding or associate or subsidiary is debarred. And what is the relative allowed to hold? Security of only face value up to an amount of rupees 1 lakh. So face value. It is not market value, it is face value of 1 lakh. But what is going to be difficult is the word relative is covered here. And if you see the definition of relative, it covers members of an HUF. So if you are a member of a HUF, you are a relative. A member of a HUF is a very big thing, because you could have your great grandfather's HUF and you are a member of that great grandfather's HUF. So you are therefore a relative of someone who is in an associate company, and you are holding shares in that company. So what we now tell people is, if you are now appointed auditor of a company, please write on your Facebook page or your WhatsApp in your family thing, I am appointed auditor of so and so company. If anyone is holding shares of 1 lakh face value, please sell them immediately.
They will buy it.
But anyway, you need to be careful, because this is a relative, and any holding subsidiary could be a damaging thing. Indebtedness, if you are even indebted or a relative is indebted, the same principle applies. So again, if you are appointed auditor somewhere, put it up on your Facebook that if you have taken a housing loan from this bank, please repay immediately, or I will repay your loan, otherwise I will not be appointed the auditor in your for this company. So again, these are things in practice, they are going to be difficult to enforce, but this is the rule now. And relative, as I said, means any member of HUF. When we have gone sometimes to even tell a company that, if you go to a place like Varanasi, you have got these Brahmins who can tell you who your forefathers are. Now all companies will have to keep one such person in their company. Because whenever a transaction happens, you will have to ask him, please find out whether he is my relative.
People, sir.
Pardon?
People, sir.
Yeah. Okay, business relationship. In business relationship also, if you have got a business relationship of more than 1 lakh with the company, its subsidiary, holding or associate company, again you are debarred from being a director. Relatives are not covered here, but business relationship per se may be very difficult sometimes to find out. Take a simple example. You are appointed auditor of Tata Sons, and on a Sunday, you go and do some shopping in West Side. Now obviously West Side or that company, whichever is, who is an associate of Tata Sons, now if you buy something more than 1 lakh from that place, do you have a business relationship with the associate of your company? The answer could be yes. Then you are debarred from being accepting that audit. So what we sometimes tell is, now you have to even be careful where you go for shopping. Because you may go for shopping, or your partner may go for shopping, and you may lose the audit.
So that if you are, say, Tata says auditor, and if you buy a motor car from Tata Motors,
this could be a business relationship, yes. So you buy it from a dealer, don't buy it directly.
But if my wife buys it,
Pardon?
my relative, my wife
Relatives
buys
are not covered in this. But a lot of people sometimes debate whether wife is a relative. Especially in foreign countries. Okay, if your relative is employed or anywhere, then also you are debarred. If you are convicted of any fraud and 10 years have not gone by, then also you are debarred or disqualified from being appointed an auditor. This 10 years here is for politicians only 5 years. If you see the press, if you are a politician and if you are convicted, you cannot become a member of parliament for 5 more years. But if you are convicted of a fraud, you cannot become an auditor for 10 more years. Okay, there are some prohibited services also which are there. Besides audit, only such services can be provided as approved, and this is a standard list. But what is giving rise to a debate is this word management services, because you cannot render management services if you are appointed an auditor. Now, what is this management services? The institute has not defined what is management services. What they have defined is what is management consultancy, which is different from management services. Now, these restrictions of providing these management services apply to the audit firm, its partners, parent, subsidiary or associate company, or even something which has the same name, trade name or brand of the firm. Now, what is management services? The nearest definition one can find is in the IFAC Code of Ethics. And IFAC is the parent body where institute also is a member. So far we can say that we can use this definition. And this definition says it is assistance for carrying out services for a company which are responsibilities of the management. So if there are any services which you are rendering, which is otherwise the responsibility of the management, it is a management service, and if you are also auditor of that company, you are disqualified from them being an auditor of that company. The obvious answer, question is this, whether tax representation services would be covered. Now you see this definition again. Any services which are responsibilities of the management. When you do tax representation can be in multiple ways. You can represent before an assessing officer, you can argue before a CIT appeal, or you can argue before a higher tribunal or court also. Now, when a person is representing before the assessing officer, that we believe is a responsibility of the management, because the management's job is to support what it has filed in its return of income. So that is the responsibility of the management. But when it comes to appearing in a CIT appeal, that is the work of an expert or tribunal or high courts. So as far as taxation would be concerned, we would bifurcate that if it is pure representation at a AO level, that would get covered into management services, but if it is in a appellate level, it would not get covered in the management services. This is as per this particular definition. What is the responsibility of the management? Obviously, the institute will have to come out with some clarification as to what is this management service, but this is what we believe is the interpretation which is feasible today to at least make out a case that some of the tax representation services I can provide, though not all, some of them at least can be provided. And the other issues which come is, does the restriction apply to subsidiaries outside India? If there are some subsidiaries outside India and I am providing some services to a subsidiary outside India, say I also have an office outside India and I am providing some such services, the answer seems to be yes. Because it is still a management service which you are providing to that company, though it is to a subsidiary outside India. And whether networking guidelines need to be modified, definitely. Because if you look at this trade name, brand name, anything, when you are a network, you work under a common name. So if one firm in Bombay is doing the audit, whereas another networked firm, not the same firm, different partners, but working under a common network, is providing some other management service in, say, Delhi, it would get covered under this. So the networking guideline again definitely needs to be modified as such. So obviously the institute has to do something fast about this particular thing. How can you remove auditors? Auditor's appointment may be removed from his office before expiry by passing a special resolution and obtaining previous approval of central government. If the auditor resigns from the company, he has to file with the ROC the reasons and other facts why he has resigned, and the NCLT may also change the auditors if they believe they are in a fraudulent manner or colluded in any fraud or something, and NCLT may even pass the order suo motu without even hearing the auditor's side of it. Now these are all new things which are there even for removing or resignation of auditors. If you are able to get appointed as an auditor with all these things also, then obviously you will have to finally go and give your audit report. And your audit report, there are a lot of additional requirements which are there. Other than following your SA 700, 705 and all, there are other requirements. Observations or comments on financial transactions having adverse effect on the company's functioning. No need now to give anything in bold or italics. but whether company has adequate internal financial controls in place and operative effectiveness of such controls. This is a new thing and this can be damaging because you may have that there is actually some defalcation of cash which has happened, but you still say all internal controls are in order. So you have to be careful as to when you give an assertion like this, what happens. And the institute has already actually come out with a draft guidance note on what would be the auditor's role on this. It should be finalized very soon on this particular point. And if any frauds are there against the company by any of its officers or employees noticed by the auditor, you have to report to the central government, and we'll see in the next slide what are those timelines. Some other matters which may be prescribed, and auditing standards needs to be followed while auditing. They would be again formulated by ICAI but notified by NFRA. Other matters described as per draft rules are whether company has disclosed the effect, if any, of pending litigations on its financial position. Very difficult to report on this. If I got 10 CIT appeals pending, 10 tribunal appeals pending, it's a litigation which is pending. What would be the impact on the financial position? So how do I know whether I will win or lose or whatever? Because if I know what is the liability, I will anyway provide in my accounts. But this is again something where the institute will have to guide members how to report on this. Whether company has made provision for foreseeable losses on long-term contracts, including derivative contracts. We had believed that accounting standards take care of this, because when you follow an accounting standard on, say, construction contract 7, you provide losses. When you have derivatives, there is an announcement which makes you provide losses. In spite of that, why does the auditor have to again report that the company has made provision for foreseeable losses? And what is foreseeable losses? Can I foresee that in the future what would be the dollar rate and what would be the derivative loss which I need to provide now? Whether there is a delay in depositing money to the IEPF. Something similar to CARO will still come, because that will still be notified under this section 143(11). And audit reporting and requirements of SA 700 will at least ensure that all your audit reports will be 5 to 7 pages long. It will be nothing less than 5 to 7 pages long. And at least in the first year you will have to make some effort to draft the audit report. Second year onward you can always do a cut and paste. As what normally happens. Now reporting for our fraud, in case, now this is in the draft rules, in case the auditor has sufficient reason and information to believe that an offence involving fraud which is likely to materially affect the company is being or has been committed against the company by officers or employees of the company, reports to be given to central government immediately, but not later than central government, not later than 30 days, with a copy to the audit committee or the board. So if there is a material fraud which is committed or likely to be committed, which is committed is fine, I do not know how the auditor can come to know likely to be committed, but in both cases you have to report to the central government directly. There is a form for it, and what is materiality is defined, frauds which happen frequently. So that is material, and frauds where this threshold of 5% of net profit or 2% of turnover is met, that's a material fraud. Report within 30 days to central government and with a copy to the audit committee. What happens if a fraud is not material? You do the reverse. First report to audit committee and then to government. So in case the fraud is not material, you first report to the audit committee and then to the government. In any case, you need to report as such. Now see the irony of this. What does it say? If a fraud is committed against the company by officers or employees of the company. Now take an example, you have a jewelry company. The jewelry company sells 22 carat jewelry, saying that it is 24 carat jewelry and charges for 24 carat gold. Is that a fraud? I sell 22 carat jewelry and say that it is 24 carat jewelry. Is that a fraud? It is obviously a fraud on the consumers, correct, on the buyers. That does not need to be reported because that is not against the company. But if an employee claims conveyance of 100 rupees extra by forging a wrong voucher, that is a fraud against the company. Now that needs to be reported. Now that is not material, so you first tell the audit committee that this employee has claimed 100 rupees more conveyance and also send a copy of that to the central government. So I don't know what is the central government going to do with that report. But this is the irony of it. If there is a fraud which is committed, see, against outsiders by the company, the auditor is not going to do really anything. But if a fraud is against the company, irrespective of the amount, it will have to be reported either to the government or to the audit committee, whichever order it comes into.
Suppose if company gives bribe to obtain an order, then it is not fraud against the company.
I give you a better example. Okay, there are rights of auditors to access books at the registered office or at any other place. Compulsory attendance now needed at every AGM, and you can also access the subsidiaries books. Now this is important because now you are also certifying the consolidated financial statements. But now, what is the auditor going to do? The auditor is now going to be a watchdog for the management, a bloodhound for the government, and a whistleblower for the public. Auditor has 3 roles now. I am sure the definition of audit in textbooks has to change now, because in India at least the auditor has 3 roles, and India is going to get a medal for the highest highest length of audit reports. So you get the Guinness World Book record for having the longest audit reports as such.
The attendance of auditors to AGM, how that will be practical, because most of the AGM we hold on 30.
What they have said is the auditor, person who has signed himself will attend, or any other person who is capable of signing also can attend. So any other CA can also attend from your office. Article trainees cannot attend.
So that's what it, in case of say proprietary concern, you are auditing say.
So you employ a CA and the CA can do it, no? Because the CA per se can also.
How many CAs you employ? Because when you hold signed balance sheet of 20 companies and 30th September is the date of AGM, how you are supposed to attend 20?
You hold it every 1 hour each, no? Okay, penal provisions. You have lot of penal provisions, fine ranging from 25,000 to 5 lakhs, fees to be refunded, imprisonment, liable for damages. If it is a firm, it is a joint and several responsibility. Action can be taken by NFRA, suo motu action, penalty for individuals 1 lakh to 10 times. For firms, it is still higher. Class action suits can be taken. So several penalties which are there. Currently, what is the penalty? 10,000 rupees. We have one section in the Companies Act currently which gives you a maximum fine of 10,000 rupees, but now it can go to anything. Your house also can be taken away. Internal audit, it is now made compulsory for all listed companies, companies with 10 crores paid up capital or 25 crores borrowings. Now, what is interesting is